Hey everybody, you're watching Bull Boom Bear Bust. It is Friday, October 21st, 2022. Let's talk about the markets. I got a lot of emails today. JJ, what's going on? I thought you said the stock market was going down. Yes, the stock market's going down. These have been some very big green days, I will admit that. But if you look, we're still in a downward trend. The Dow Jones today gained over 740 points. Big day for the Dow Jones, up about 2.5%. S&P 500 up 2.3%, NASDAQ 2.3%, Russell 2000 2.2%. So pretty steady across all major indexes. Here's the thing. You see a downtrend. The way it works is when enough retail investors, when enough little retail investors, what we call them, little mom and pop investors or individual investors, someone with a E-Trade account or someone with a Robinhood account, when enough people get in there and short the market, then that's when the big money will come in and do something called a short squeeze, and they will buy it up. And that's why you see a stock market, instead of going straight down on a straight slope like a ski slope, it's like this. It's lower highs and lower lows. But ultimately, overall, this is still a down trend. They're going to short squeeze the little guys. And when the little guys exit their short positions, then they'll drop it back down. It's a massive wealth transfer scheme. That's what it is. If you ever want to know more about that and how the stocks are heavily manipulated, even news is put out there at certain times to give the excuse for big sell-offs in stocks. And the insiders, they all know exactly when the news is going to hit. They're all out of it. Then they come in and buy the dips. They ride it up, and they squeeze all the shorts out of there when they buy it up, and then rinse and repeat. It is a big Ponzi scheme, and you've probably heard the term or read the term that 90+% of day traders or short-term stock traders fail. Now, people that are in it for the long term, ultimately they'll make money. People that are in it for decades, through their retirement account or what have you, a lot of swing traders, they know how to kind of play the game. But day traders get burned, and people just trying to look for a quick buck, 90% of them don't make it. And that's why I got out of it. When I was in it, I started learning. I was watching videos by Timothy Sykes, but I didn't want to be glued to a computer all day, so I really didn't fit into the mold of a day trader. But I definitely learned a lot about it, and I learned a lot about the manipulation. And you've probably heard the term short squeeze. When too many people get on one side of the trade, big money comes in and they'll blow them out of there. And the same thing with people going long. When too many people go long, when a lot of retail investors go long, big money hedge funds, etc., will come in and they'll short the market, and they'll do it on leverage. So they may not even have the money. And if you've ever had a brokerage account with leverage, then you know what it is. You're borrowing on margin. A lot of these trading firms, they'll borrow money and then use it to trade, and then after they make the gains from the trade, they'll go ahead and pay it back, right? So it's a big scheme. It's a big money transfer mechanism. That's another name for it. There's many names. Please let me know what you think you'd call this. If you agree, please let me know your experiences down in the comments. But that's what I found out and discovered through my studies and through my years of trading stocks and researching. Also, when there's a big scare event or something happens to where even the big hedge funds are scared and you see a massive sell-off, then you have the plunge protection team that could come in and basically prop up markets, prop up stocks, and come to the rescue. But let's talk about some other topics today, and that's what's happening with mortgage rates and the 10-year bond yield. This yield is holding steadily above 4%, and if this continues on this trajectory, we're going to be seeing 8-9% mortgage rates. Some even are predicting 10% mortgage rates. You're going to see huge price corrections in the housing market if this is allowed to continue to happen. And I hope it does, because we do need an area of the economy that has deflation. Unfortunately, for a lot of people, they went out and bought homes in the last couple of years. Not a good time to buy a home after prices have doubled and tripled in some cities. We warned you, but that's not true in all cities. There's people here on this channel that said, hey, I bought a home in Tennessee. It was, $160,000, and those people will probably be just fine. But people that bought on the coast and in some of these bubble markets, they're going to be in the most financial distress, and we're going to see a lot of people walking away from their homes again. And these mortgage rates they've risen at the fastest pace in history, even faster than the lead up to the 2008 housing bubble that ultimately went bust. So it's going to be interesting. It's going to be one of the main topics we'll keep an eye on here in this channel. All right, let's talk about credit cards. We've got the American Express CEO out there saying everything's fine. The consumer's still strong. Quote, we're not seeing any changes in consumer spending. And this is an article put out by Yahoo Finance. We're not seeing any changes in consumer spending. And he's talking about the total amount that consumers are spending, how many times they're swiping their credit cards. Well, of course, because everything costs more, so people are spending more. There's that. People swiping credit cards more, yes, because they no longer have the cash, or people have less cash now than at any point since about the 2008 financial crisis. So savings levels have plunged. So of course people are going to swipe their cards more. They have less cash to make purchases with. They're not doing the debit card as much. They're paying more with credit cards. So again, we have another credit card CEO saying everything's fine because people are putting more on their credit cards and they're swiping the cards more. That means everything's fine. What was it last week? We had the CEO from another card company. It's actually Bank of America, but they have credit cards. So Bank of America credit cards, checking accounts, etc. That CEO also said everything's fine because the number of credit cards that people were swiping and the levels of debt that people are getting into. So it's this twisted reality here where taking on debt is good. That means you're strong. Swiping credit cards is strong. That means you're a strong consumer in the eyes of these banks. Of course, the banks are going to say that because the banks make money off of people getting further into debt. The interest against the debt is more. They could charge more fees as more people drain their checking accounts, so more overdraft fees, more late payment fees, as this economy continues to punish the average working person, the middle class person. And banks are laughing all the way to the bank. Well, they are the bank because they're already there. There's that old saying, laugh all the way to the bank. They are the bank, and they are laughing all the way to themselves because they know in the end, if millions of people default on their loans, they're just going to get rescued. They're just going to get bailed out. In the meantime, while people are struggling to keep their head above water, they're making money on late fees, overdraft fees, balance transfer fees, people transferring balances from different credit cards to another, introductory zero interest rate, transfer your balance. It's usually a 3% fee. They're making money hand over fist. The bankers, the CEOs, they've never been wealthier at any point in history. This goes beyond the wealth gap, the wealth divide. This goes beyond anything we've ever seen in the history of the United States. Worse than the Great Depression, worse than the 2000 .com crash, worse than the housing bubble, financial crisis era. This is the ultimate division between the haves and the have-nots, and it's likely going to get worse. One big thing on my radar is diesel. Diesel is approaching it looks like a end game, and when diesel runs out, look out, folks, because supply chains will be either heavily disrupted or will freeze up, and it only takes 2 or 3 days before the grocery store shelves to get cleared out. And it's known as the term for that is 72 hours to chaos. When the trucks stop delivering, let's say diesel does run out, it becomes scarce enough where trucks stop delivering, 2 to 3 days the shelves are cleared, especially food items. And that's going to be the Mad Max scenario, and it's going to get really, really dangerous. So keep stacking. Try to get some canned food. I hope you guys have a garage like I do with space to put stuff. If not, if you're in an apartment, hopefully you have some space set aside for a few days with the food and water, and prepare, because something could break in these credit markets at any point. These deliveries could stop. The rails, we see the Mississippi River now is so low that they're worried about transport, the type of transport that they do on the river. And there's lots of risk out there, folks. And I'm starting to get the feeling that something big is going to happen before the end of the year. There's already big things happening all the time with the defaults and what happened over in the UK with the bond crisis. And they had to come in and basically rescue that at the last minute. Crises are happening all the time. Seems like every few days here and there, globally. But something big here in the United States, I have a bad feeling. And I just want everybody here watching this channel to be prepared. I think most of us are. I think most of us will be just fine because we know what's coming. We know what's ahead. And this inflation is going to get worse, with the exception of the housing market and car prices. Car prices coming down. We're going to talk more about that early this week. Another report coming. So please like, subscribe, come back to this channel if you like what we talk about. Thanks everybody for being here and for your support. I appreciate every one of you. Bye for now.